Today's guest, Sara, is a forensic accountant, and she's got this unique talent in that she also does. Here she is. All right, so Sara, we're halfway there. Let me get you on here. So let me invite the high conflict cases that we deal with. Our client has a business with their spouse.
Hey everyone.
Yeah. So I was so glad to meet you, Sara, recently and find out that you have this skill that we rarely have talked about. It's been years since we talked about businesses and how to deal with them in divorces, because I've learned that when you own a business with your spouse, it's almost like you have to get two different divorces, right? It's not
Yes,
simple.
definitely. If you think about it, there's partnership disputes in businesses all the time. You don't have to be married to your partner, but when you co-own a business with them, you're having a partnership dispute and a marital dispute at the exact same time.
Yeah, it makes so much sense. So before we even dive into business valuations, what they are, and how they can be used in leverage, Sara, why don't you officially introduce yourself?
Yeah, thank you so much for having me. My name is Sara Nanchanatt, and I own the forensic accounting firm SN Forensics. We're based in New York City, but we work remotely with clients all across the US. And we work all different kinds of divorce cases, as well as other areas of forensic accounting. And more recently, we're being brought in when businesses are involved because it's so complicated to understand what the income of each person is, what to do with the business, is there a value? So I'm really excited to be here with all of you today to talk about business valuations and divorce.
Yeah, I know. Me too. Me too. But like I said, it's like a topic that we need more information on because we have so many in our community dealing with a very difficult ex, and there's a business involved. And I think one of the biggest issues that we see from the beginning is that our client doesn't have access to all the financials, even if it's a 50-50 partnership. How do you even start when it's supposed to be equal and one person doesn't have access to the records?
Yeah, so that's a great question. And I do see it a lot. Oftentimes I'll see, if it's a man and a woman who are married, maybe the woman is listed as 51% so they can get, minority status and certain advantages, even though she, isn't provided with that access to the business. And so we see that quite often. There's a couple of strategies I have. The first is, ideally you're working with your attorney, you're going through the process and you're going to request these documents. That's the ideal scenario
Mhm.
is you request them, you get them.
Yeah, that
We all
never.
know that doesn't happen. And so one of the things I always say is if you're going through a divorce or you're thinking about it, keep an eye on the mail. Notice what financial institutions are sending documents to your house because you might need to subpoena them in the future and you can subpoena personal and business records. So keep an
Mm.
eye. Did the business get a letter from Chase? To kind of figure out what accounts they have. Also, tax returns, you can request the tax transcripts, and it's not always perfect, but that's a great place to start with valuing the business is just getting those tax transcripts to understand what's their reported revenue, what is their reported expenses, and go from there.
So with tax transcripts, I haven't even heard that term before. I think of tax returns. What's a tax transcript?
It's a way less intuitive tax return. So basically, if you get it from the IRS website, they don't give you like the full tax return. They'll give you, I don't even know how to explain it. It's like basically just like a typed up piece of paper where it says like total revenue is this,
Mm-hmm.
deductions are this. So it like highlights the bigger picture, but it's not broken up super intuitively. So it's kind of tricky to read, but it just gives you an idea of what's been filed without getting the actual return. It's like an abridged version.
Yeah, it's like the Cliff Notes.
Exactly. It's like someone, like a court reporter, like transcribed what they saw on the tax return as opposed to being like, here's how all the numbers are calculated. It's just a bunch of lines with the information.
So it's like a surface level summary without the details, but it still is a piece of evidence from the IRS. It's not just like a self-serving exhibit where you said, "Oh, here's what I think it is." nope, this is what the IRS has. Even if you can't get the tax return yet, it's significant.
Correct. And it does have the details. It's just not obvious. Like you kind of have to go through it and figure out what it says, but it'll tell you total revenue, total deductions, if there's dividend income, all of that will come up on a tax transcript. It's just not broken out the same way. And to my knowledge, I've never seen someone like subpoena and get a full tax return. Like if you're
Mhm.
getting this request from the IRS, they only give transcripts.
Okay, so I always think about the cost benefit analysis. Like, how much do I have to spend to get what hopefully will help me? How much is getting a tax transcript, and how long does it take on average? Do
So
you know?
that is a great question. If it's a joint tax return or um, you have all the information you need, which is part of it. You can just go to their website and request it. I don't believe it actually costs anything. And you can get it from them. I don't know how the process works if you have to like go more through the subpoena. I'm
Hmm.
assuming there's a subpoena costs, attorney's fees. But if you have the information like the EIN number or the social security number of the individual, you might be able to just get it from requesting through the IRS website.
All right, that is so good to know because we always look for ways to do it ourselves if possible, as cheaply as possible, instead of having to go after the long, arduous subpoena and then things don't turn up. And I also love the idea about checking the mail, even for the institution. So if you don't know an account number, and often there's many accounts in various hidden places, but just to know where to start with where something might be.
Right. And so you send or your attorney or whoever sends the subpoena to the institution, and you say, give me all records for X person's name and X business.
Mm,
And, you attach whatever you need to attach to show that it's part of a divorce proceeding. And then you get a piece of information. It might not be all the information you need, but someone like me can then look at the bank account and say, okay, now that we have this from Chase, we see transfers to Wells Fargo. So now we're going to go to Wells Fargo next. And we're
mhm.
just going to start piecing the puzzle together.
Yeah, so you're like a detective.
Yes.
All right. So how do you start putting together? Well, let's talk about what is a business valuation and how does that connect to getting a tax transcript or tax return or whatever? Like, how does that connect to the bigger picture?
Yeah, so a business valuation is trying to figure out, depending on your state, either the fair market value or the fair value of the business. So if anyone was operating this business and you wanted to buy it on the open market, what value would we assign to it? And so
Hmm.
that's important for a couple of different reasons. One, if you're co-owners, or even if you're not co-owners, but you live in a state where the business is considered marital property, there's a potential for that to be divided as an asset in your divorce and for you to get a percentage of it. So you want an accurate valuation to know, if you're 50-50 owners, one of you is going to walk away. Just like with any partnership dispute, the remaining partner has to buy you out for your half. And what is that half equal to?
Hmm.
So you need the business valuation to understand that component. Also, in the process of the business valuation, we can identify income available for support because, as a forensic accountant, I see a lot of creative accounting out there.
I
And I see
love
a
that
lot
term.
I see a lot of small business owners who want to minimize their tax impact. So they deduct a lot of personal expenses through the business to pay minimal taxes. But then when it comes to income available for support, well, you didn't really make $20,000 a year. Your kids are going to private school. You're driving a Lexus. You live in the most expensive town in the biggest house. What was your actual earnings? So
Mhm.
then we have to look at all of those personal deductions and back that out to figure out what they actually made as business owners.
Yeah, I mean, we learned this term from a New York City attorney. His name's Yoni Leverett. He said there's something called IPS, instant poverty syndrome, that happens to a lot of people right around the time or a year before it's time to get divorced. And so suddenly, oh, I had a terrible year, or I lost my job, or whatever the case is, that the money has changed and now I have nothing, or it's far less than the past.
Right. And I actually had a case, I ended up going to court on it. And it was interesting. So, when an expert goes to court, the other side hires an expert. And so, as part of the business valuation, I won't get too technical, but you basically assume a reasonable salary for the business owner. I
Hmm.
think we had assumed like $50,000 based off of the information we had. And the other expert like attacked me and was like, no one can live on $50,000 in that county. Like he could go work, at a fast food establishment and make more money. So when he was cross-examined, our attorney took the tax returns and was like, well, this year it said he made 20,000 and last year it said he made 50,000. So is it your professional opinion that nobody could live off of this the way that he's living and this be his true income?
Hmm.
And so, that's why you have to be really careful. I mean, one, you should never lie on your taxes, just friendly CPA advice out there. But number two, it's all traceable. There are ways for us to come to the right conclusion. And I think at the end of the day, that person was reporting 20,000 and maybe they were making 100,000. It's not a huge leap, but when it comes to spousal support and child support, it does make a big difference.
Right. And also it affects your credibility,
Right.
which is everything with court stuff. Because if you start off lying and people could poke holes in your financials, then, you're going to be in a worse place with the judge.
Absolutely. And I don't know if this is true in every state, but in New York and New Jersey, where I'm often working, matrimonial judges are mandatory reporters. So if it comes out in court that you are committing tax fraud, that can get reported to the IRS. So just notes out there of, I know all of your friends do it. It's a way to, keep money in your pocket when you have a business, but especially in divorce proceedings, that business is going to be analyzed with a fine-tooth comb, and you really want to make sure that everything is reported accurately.
Yeah, that's interesting. I don't think that every state has mandatory reports. I think we get excited. I know I had gotten excited when I discovered some creative accounting on my ex's own tax returns. And I assumed this would be so significant that the court would report it to the IRS. And they didn't, and they don't in most of the places that we have clients all over the world, and in most states, the judges don't report it. And I think I was also told by an attorney, you want to be careful, because if you focus on tax fraud and let's say the person ends up in jail, that's going to affect your support. So do you really want to go down that route of having them being prosecuted if it's going to, isn't your goal to get out of here and have yourself and your kids supported?
And that's a great point. And also, if you're a co-owner of the business and you're not in tune with the financials, you're personally liable as well if it's a
Mm-hmm.
joint business and you're signing the tax returns.
Yeah.
So, just a friendly PSA out there to everyone to please report everything accurately on your
Yes.
business tax returns.
Thank you. Yeah. So, okay. So now let's start talking about business valuations as leverage, because we always want to keep things out of court if possible. How can we use business valuations to pressure someone to settle and get this done faster and easier and cheaper?
Yeah, so it's a great question. And, first, it always depends on the facts of the case. I work a lot outside of the court system where we're trying to get a value. And as long as we can get in the ballpark, we can have those conversations, we can come to an agreement. But a lot of times, what happens is people say, my business has no value. It's just me. It's all goodwill, or, those types of arguments, and just letting them know that, I'm sorry, but that's not how the court's going to see it.
Mhm.
And if you have to go to court on a business valuation, I think part of the leverage comes from the cost as well. Because what you can do outside of court, we offer cost effective solutions that get within the range of the value. But if you go to court, you each are spending $60,000 on an expert to write a report, to testify, to
And
then
that's
write
a
a report.
fraction of the whole expense of going to court.
Exactly. So if you're thinking about it, if your business is only worth maybe $100,000, you think it's worth zero. well, let's do a valuation and try to come somewhere in the middle, or you're going to spend more than the value of your business in court to have it valued
Hmm.
and then have to pay out the additional value of the business on top of the legal fees and the expert fees. So really it's about, staying out of court, getting the right answer, and just being truthful with yourself. Like, the best question that we ask when there's an expert who says a business is worth nothing or an individual is, then why do you do it? If your
Hmm.
business is worth nothing and you make no money, why aren't you an employee somewhere? Why aren't you getting benefits? It's it's hard for me to imagine how people think they can still get away with saying, no, there's no value. Take me to court.
Yeah. What about something like a service business where there's like, I think about what Chris and I do, like there's not stuff.
Yeah, and that's a great question. And within the business valuation, again, without getting too technical, we consider the company specific risk. So
Mhm.
we would say, okay, um, trying to think, unfortunately, I think divorce is kind of a stable industry. There's always going to be something out there. But if you look at like restaurants and what happened with COVID, there's some degree of risk that you have to add in because the company, could be affected and stop operating. But then
Mhm.
there's also certain states allow discounts. So not every state does it, and it's called a discount for lack of marketability. And
Mhm.
so that's saying, like your firm or even like my firm, someone could buy it, but a lot is based on my brand and my reputation. Like,
Mhm.
can I really market this with someone else at the helm?
Right,
And
right.
then that discount would reduce the value, but it doesn't bring it to zero.
That's really interesting. Well, good to know. All right. So, any other things that people should be aware of when they are sharing a business with their, I almost said ex, with a spouse and they're on the verge of divorce?
Yeah, so I actually had a consult yesterday and it was very interesting because we talked about the free labor that a spouse provides in the business
Hmm.
and how the court doesn't always accept that as a contribution to the business. Like I even think about it last night, my husband and I are stuffing envelopes to send brochures to attorneys and no, I don't pay him and he's not listed as an owner of the business. And so I really think people need to think about one, how as a spouse, your labor does not have to be free, and that you could gain a percentage of the business if you're actively involved in it, because your legal system might not agree with your active involvement. So to make sure that you have contracts or records that say, hey, you've been helping me a lot. I'm going to give you 20% of this business while you're still married so that you have something to hold on to in your divorce. Because I think a lot of times you get that, free labor from the spouse, and then the courts rule the business isn't marital and they got nothing. They weren't paid hourly, they didn't get paid out of the business, they have nothing to show for it.
It's so funny, Sarah, because you just mentioned how your husband doesn't have any doesn't have any percentage of your business, but you.
I know, I know. It's the pot calling the kettle black out here, but it is something that I think about. And I even, my husband and I, we've been married for 2 years, so we're still in the newlywed phase. No one wants to think about divorce.
Right, right.
And I say things to him like, we get a check from his father, and I'm like, do you want your father to write a gift letter and like say this is 100% separate property? And he's like,
Yeah.
what are you talking about? And I'm like, because
Yeah.
they just see these things come up,
Yeah.
but you don't think about it until you're on the other side.
Yeah. Yeah. So it's always good to just have your wits about you just in case, hopefully not, but really good to know. All right, so Sarah, how can people find you? And before I forget, when we first talked, you mentioned and you mentioned it here that there's other things you can do that are not as expensive as, let's say, some full business evaluation. I can't remember the name of it.
Yes. So the technical term in the accounting world is a back of the envelope calculation, which
Yeah.
comes from like sitting in a conference room, doodling on the back of an envelope. So we
Hmm.
can do that to just kind of give you an approximate value. Our most popular service is called an indication of value.
Hmm.
It's a little bit more inclusive but it still is just our calculations and a brief letter. It gives a range of value for the business, and that's what we use most often in mediation if we're court appointed neutrals, to really keep costs down but make sure we're close to the right answer. And then what you see when you go to a trial or in court is called a calculation of value or a conclusion of value. And that's your 60-page report that talks
Oh
about
my gosh.
economic conditions and costs, probably more than you make in a year,
Oh,
more than anyone makes in a year.
oh my gosh. All right. So how can people find you?
So I do have an Instagram here. It's brand new.
Yeah.
You guys can message me, but my website is snforensics.com. There's a contact page. Definitely feel free to reach out. We have consultations. We'll talk to you about your case, and we'll also talk about, does the business valuation make sense for you? Because it doesn't make sense in every case, and we want to make sure we're not charging you for something that you don't need and wouldn't benefit you.
Yeah, well, thank you so much, Sarah, for taking the time, especially I know during this busy season. And this is so, so helpful. So I'm really thrilled that now I have another resource to share with our clients and communities about businesses and how to handle it and what to think about and little things that they can do themselves, especially to save money in getting this done because it is very, very overwhelming.
Absolutely. Well, thank you so much for having me, and I look forward to talking with anyone who has questions about this.
Yes, and really appreciate your allowing that for them. All right, let's stay
Take
in
care.
touch.
Thank you.
Okay, bye.
Bye.